What's up, traders? Zach here from the Trading Network. Hope you guys are doing well. It is Wednesday, January 20th, and I've got another daily market profile recap for you. So today we broke new all-time highs, and the key levels that I was looking at before New York session opened were the following. I was looking at 38.2075, which was the overnight high from the January 11th overnight session, and that was our prior all-time high as well. I was looking at the January 14th range high at 38.16 as the second key level. I was looking at 38.0925, which is, that was a typo there, that is the January 14th naked point of control. And last but not least, I was looking at 37.9850, which was the most recent overnight point of control. Now, if we go to the profile real quick, let's just point out these levels one more time. So again, I was looking at this 38.2075 level. That was that overnight high from January 10th into the 11th. 38.16 was the range high from this January 14th session right here. 38.0925 was the January 14th naked point of control, which was that level right there, this yellow line. And the last level again was that 37.9850 level. 37.9850 was the overnight point of control from last night. So scrolling down here, you can see that the news events headline risk that we had, basically just the the Biden inauguration, which was obviously potential high impact, but we don't really know how that's going to affect the market. So we got to really take that with a grain of salt and just keep that in mind that there are outside risk events possible. So with that said, overnight inventory was 100% net long once again, and we were looking to open significantly above range and value. That means that we were looking to open significantly above the previous range from January 19th and above, obviously, the value area as well. If we're above range, then we're above value area. Just realized my camera wasn't on there. So just to quickly reiterate here, we opened above range and value, which means that we opened above the entire range from Tuesday's session, the January 19th session. So when we open above range and value, this means that there is a higher probability of trending price action. And when overnight inventory is 100% net long, that also increases the probability of New York session fading the overnight to the downside in this case. With that said, if you see that overnight is opening with a gap, or the New York session is opening with a gap, meaning that there is a gap between the high of the previous regular trading hour session and the low or the open of the current session, then you can consider gap and go rules in play. Gap and go rules mean that if price gaps up, like we see here, you can see that we have a gap between 37.97 and let's zoom in here and see where we actually opened. All right, so zooming in, O period right here at 38.15. So you can see that there was a gap between 37.97 and 38.15, which was the overnight high, obviously. And with that, if price opens up and quickly moves in the direction of the overnight inventory. So overnight inventory is long, meaning if we open up New York session and we continue to get bought up, then that is actually increasing the likelihood that we are going to gap and go, which means price gapped up and price is continuing to be bought up, so the trend continues, which is exactly what happened. All right, so quickly just wanted to hop over to the regular candlestick chart and show you, in addition to the profile, what this gap and go structure looks like, continuing the trend from the overnight, A, and B, the profile structure that we had, which was an open test drive. So first and foremost, you can see that overnight inventory was clearly long. You can see we are living above the opportunity zone. This opportunity zone indicator is available in the Trading Network proprietary indicator package. We then move into New York Open. You can see this is New York opening range. This indicator also in our indicator package. And through New York Open, you can see that we opened here. We zoom in here. So this indicator, it's actually coinciding with R3, which is the third upper resistance level of the Fibonacci pivots. So you can see, let's see if I do this real quick. If I remove the fib pivots quickly, you can see we have this pink dotted line here. Pink dotted line is the opening price for New York session. So you can see we opened here, quickly moved up, moved down. We have the open, We have the test down below, creating the opening range low. Also testing this previous brief resistance area right here, confirming that buyers are stepping in, and then we have the drive. So we have the open, we have the test, and then zooming out, we clearly have the drive. Now, let's see what that looks like on the market profile. So zooming in, we've got O period again here at the overnight high. Get rid of these drawings briefly. So we've got the open. We move down. We test this level. And then we drive. So aside from the open drive, where we open and then drive up immediately, this is the second highest type of directional conviction profile open. So the open drive and the open test drive, if you see those on the profile, if you see those on your candlestick structure, understand that it is a significantly high probability that we're going to be trending for the day. And as you can see here, I mean, we just continue to trend continuously throughout the afternoon. Pulled back below the opportunity zone in the overnight session, beginning of the overnight session. But the entire New York session, you can see I have this bull flag drawn here. Beautiful bull flag coming down to the first upper deviation of VWAP, putting in bullish divergence here. Lower lows on price, higher lows on the oscillators here. Just exceptionally high probability trending plays. So when we see, again, profile structure like this, we got to say trend is our friend, and we got to just take the path of least resistance as long as it's allowing us to. You know, you can see that price hit the opportunity zone over and over and over and over and over. And it's our job to just say, okay, this is working, price is trending, so I have to do my job and make sure that I'm taking advantage of this trending price action. And sure, it'll break sometimes, but when it breaks, you know, you can go over and you can look at something like the 1000 tick for further confluence, and you can say, oh look, we're actually just coming down into, you know, something like the 1000 tick opportunity zone, or we're putting in bullish divergence on the 1000 tick and the 377. Ton of confluence there. Trend is still intact, operating above that first upper deviation of VWAP. And again, just really high probability plays, lots of confluence, and you can remove the guesswork when using tools like this in combination with market profile techniques. So let's move back into the profile here, and let's go back into the rest of the summary. So my thought process was, today I was going to be looking at the 38.15 level as the line in the sand. Now you can see 38.15 was the overnight high, and my thought process was, if we could move and hold above that level on open, I was going to be looking to take conservative long opportunity towards the all-time high at 38.2075. Now, I mean conservative in the sense that we're at all-time highs, we're in blue sky breakout territory if we are breaking the overnight high, if we are breaking the previous all-time high. So I want to make sure that I'm being careful. I want to make sure that I'm considering what kind of risk I have on, and that, you know, I don't want to have any sort of large position sizing on, and I don't want to have any sort of elongated risk in the market. I am a scalper. I like to take my high probability trades, get in, lock my profit in, get out, and do that repeated over and over again on a session. So that's what I did today. I scalped around. I traded the opportunity zone. I mean, we really kept it super simple, just trading the space between the op zone or the 21 and 50 EMAs. And, you know, that's our main strategy when price is trending. And that's one of the main strategies that we teach in the fundamentals of futures trading. So getting back into the trade plan here. If price could move and hold above that 38.15 level on open, I was looking to take that long opportunity, and I was going to watch reaction at that level to determine further positions based on the reaction. Now, as you guys I'm sure saw, we continued to trend. We kept hitting the op zone, we kept using the moving averages as support, and we continued to make higher highs and higher lows for the most part throughout the day. So on the flip side, if we couldn't hold that 38.15 level, I was looking to take shorts down to that 38.09 level, and then the high from yesterday at 37.97. So moving into the scenarios, just to reiterate quickly, upon open, I was looking to see acceptance above the overnight high at 38.15, which is exactly what we got. We moved above the overnight high quickly and held there. So when I saw that, it was trend time. I was going to allow the trend to be my friend, and I kept taking op zone trades repeatedly until they stopped working. And to be honest, they really didn't stop working. So because we did not, lose 38.15, we held that level. I wasn't really interested in shorts. I didn't see behavior change significantly enough for me to want to change my bias. All right, so let's dig into the summary and the targets here. Let's start with the downside. Keep it short and sweet. No downside targets hit. First downside target was that 38.0925 level, which was the point of control from the 14th. We got within 2 points of that. Did not touch it. So no downside targets hit. And in this case, buyers were in control all day, and that's what happens. All right, so upside targets. This was the line in the sand. Once again, 38.1550, the overnight high. Upside target number one, that was 38.1775. That was the overnight high from the January 13th into the 14th session. And the second upside target was 38.2075. That was the overnight high from the January 10th into the 11th overnight session. Now, if we go over to the weekly profile here, you can see that I was targeting the 22 level, which was right under the weekly high and also the prior all-time high for the week of January 4th. So that was my third upside target, and my fourth upside target was 38.31. Okay, so just going over to the candlestick chart here to show you how I got the last target. Again, when we are at or in blue sky breakout territory, all-time highs, it's very hard to determine targets. So A, that's why I like to take profit quickly, get in and out of trades quickly because I don't want a lot of risk on in that area. B, I use the VWAP deviations and Fibonacci pivots to help me determine targets. Now, because we opened right at R3, this didn't really give me a target. But I had the second upper deviation of VWAP around the 25 level, and I had third upper deviation of VWAP around 31.32. So that's why I picked that area for the last and final upside target. Obviously, we moved much, much further above that area. But even using that 15 line in the sand level and taking small little scalp trades, bits and pieces out of the market from 15 all the way up to our last upside target at 31, I mean, that's incredible opportunity. You just need a point here, a point there, a few points here, a few points there, and you can easily do that by following the trend if you have a good trend following system. So with that said, all of our targets were hit in the initial balance, which is the opening 1 hour of the session. So that right there is an ideal day for me. All of our targets get hit in the initial balance, which is the opening 1 hour range, and I am free to do whatever I have to do with the rest of my day. And that's the beauty of being a trader. We can have high probability edge. We can have multiple systems or multiple strategies for different market conditions. We can see that one of those market conditions is presenting itself. In this case, we had a trending market condition, which was very obvious upon open. I utilized my trending strategy, the opportunity zone, and I took advantage of that. And you guys will see, if you go ahead and look at our Instagram, video should be left on there for about, I'd say another 12 hours or so on our story. But I broke down the first trade, and it was 7 minutes into the session. I locked in over $1,000, and that was half my profit for the day. Right there, one trade, not a ton of size, and a very simple trend following strategy. So if you guys are not following us on Instagram, definitely go check us out on IG. And with that said, thank you guys very much for taking the time to watch these videos here on YouTube as well. If you guys are enjoying this content, please feel free to like and subscribe and leave a comment down below and let us know what you think. If you guys have any content that you have in mind that you'd like to see in the future, also let us know in the comments. And also check out the links in the description below where you will find access to our Facebook group where you can get these trade plans that we just reviewed every day for free at market open, again, in the description below. And you will also find access to our website, thetradingnetwork.io, where you can get information on one-on-one mentorship with me, the proprietary indicator packages that we offer, as well as our private Discord group where you can watch me and the Trading Network team trade live every single day, Monday through Friday at 9:30 a.m. Eastern. Last but not least, you can also purchase access to the Fundamentals of Futures Trading course, which includes lifetime Discord access. If you guys have any questions, please feel free to leave those comments. Feel free to reach out to me on Facebook or any of our social media channels, and we will be happy to get back to you as soon as possible. Thank you guys so much. Appreciate you being a part of the Trading Network, and I will see you in the next video.